What's up, guys? Today I am taking you outside. I'm out here on my dock, just actually touching grass for once. It's pretty nice outside. I figured I'd switch up the form of content, take you outside with me, and we'll talk a bit about stocks that I'm looking at for the next 6 months. And those stocks are Zeta, FSLY, and Upwork. Now, they all do have earnings coming up, but these are the 3 stocks that I think are poised for the biggest move, not only in the next 6 months, but even into the next couple of years because of AI. And I'm a strong believer in AI. I think at some point it is going to take over a lot more than what you're even seeing today. Obviously, Nvidia and AMD and all these other AI companies are near all-time highs, and it's really hard to find companies today that are selling at a discount. So the first one is Zeta Global. Zeta Global was founded in 2007 as XL Marketing, and it was founded by 2 people, David Steinberg, who was just a serial software entrepreneur, and then you had John Sculley. John Sculley was the former CEO of Apple and PepsiCo, and over the years they rebranded, changed their name to Zeta Global, but really it's just a marketing platform where big brands can advertise, run campaigns, find their target customer. And Zeta has a huge data set of customer profiles and the hundreds of millions of different data points where they can specifically target different customers. And so I think Zeta, from just a fundamental perspective, is a great company with a lot of upside. It's trading under 5 billion market cap, so it's a smaller company. And they do have competition. There are huge players in the space like Salesforce, Oracle, Adobe. But nonetheless, I do think that they're going to benefit greatly from AI. They do have AI integrated more into their platform to help their customers actually find and target and personalize those ads to, actually sell their specific product, whether it's like Nike running a campaign for a sneaker, whatever it is. But they've been growing a lot. Just looking at some of the financials here, Zeta is growing at roughly 23% year over year, 194 million in Q1, gross margin of 65%, forecasting 18 to 21% growth for fiscal year 25. But really all of these companies that I'm talking about here today are at an interesting inflection point. They IPO'd, they had the quick run up, they've been bottoming out, and now they're starting to find a base, and hopefully they can flip that into an uptrend and continue higher as the underlying fundamentals of the business improve. So I do like Zeta for the long term, but I am playing shorter dated call contracts, and hopefully it makes a run here before earnings in early August. Next up, we got FSLY. This really just makes website apps and AI tools load way faster, and that's through a content delivery network. FSLY stock, the price has dropped quite a bit over the last several months, and I do think it's at an interesting point where it can break a downtrend and have a technical breakout. But just from looking at its business model, I do think that more and more people are going to compute and use these AI models at the edge, and having faster load times is extremely important. And FSLY, as a content delivery network, that is the purpose, right? So say you have a server that's in California, but you are located in New York and you want to load a website. Well, that data has to send from New York to California and back to New York, and that takes, fractions of a second. But if you set up a distributed network or a distributed server in New York, then from New York to your house would be a lot faster than going across the country. And so that would save fractions of a time. And obviously everybody's going to be looking at using their phone, using ChatGPT and everything else. And of course, we increase the speed at which all of those things load. So really bullish on FSLY overall. I think it's going to benefit greatly from just the AI wave of people using more AI. They also have strong developer tools and a proprietary edge computing tech that lets companies run AI and code with super low latency that's better than other legacy CDNs or content delivery networks. Their revenue up 15% year over year. That's not that great. I would love to see that more in like the 20 or 30%. Gross margin is 51%, but it's trending higher over time. So that's a good thing. Still unprofitable, just like Zeta, but it's narrowing its losses and it's looking to break even around fiscal year 2026. So that's next year. It competes with Cloudflare and AWS, which are giants in the space. So they do have really large competitors. They're still burning cash, and it needs more enterprise adoption to scale their business. So there are some really strong risks, and obviously the market is good at pricing stocks. It's more likely that the market is pricing it accurately than it's not. But it's really up to you to decide if the future of the business can exceed others' expectations. So I would rank Zeta 1, FSLY 2. Upwork, this is really an interesting one. If you've ever used Upwork, it's like a LinkedIn for freelancers. So people can post jobs and freelancers just bid on those jobs. It's kind of like Fiverr in that sense, but a bit more larger talent, marketplace, all of those things. It also has a global scale, but it is benefiting greatly from AI, because there's all these people creating AI agents, AI apps that can handle certain tasks. And there is a huge uplift on Upwork's platform of these people that are basically solving jobs with AI. So I think that at least in the short term, Upwork is going to see an uplift from all of those things. And yeah, I think it's a great business. They have a lot of revenue. I wish they could actually increase their take rate as well as their margins. And if they can do that, with their revenue being at 190 million, up 10% year over year, I think this business can get back to growth as well as increase their margins considerably. AI jobs is also its fastest growing category on the platform, and companies can use Upwork to scale AI teams on demand. So I think that's also another interesting point where these companies can actually build out teams of agents through Upwork's platform. So I think all of these things are really good. Some of the risks are it's just been slowing. The revenue hasn't been accelerating, which isn't good. There's some gig economy regulation risk, but I think that Upwork could use not only these AI jobs, but even an upgrade to its platform that could potentially create a lot of value for its customers that are using its platform. So that's an interesting one. I really like these companies where they are like the largest talent marketplace, or they have a lot of customer data, and then you can leverage AI tools for that, for that reason. So I think that those three companies are in interesting spots, and I do think that we are going to see a considerable uplift on those three. So those are the three stocks that I'm looking at for the next couple months. I do think that all three could have a breakout here soon to the upside, or could be used as a long-term hold in a portfolio. For full transparency, I only have positions currently in Zeta. I don't have anything in FSLY or Upwork, but I am thinking of actually loading into those positions either before or right after earnings, depending on how those go. As always, do your own due diligence. These are all just opinions of mine. What do you guys think? Let me know in the comments. And if you haven't already, make sure you guys join the Discord, and I'll see you in the next video. Peace.